Hi guys, so let's now look at rent or price ceilings. Okay, so this can cause various disturbances to a market and lead to a situation where the market is not going to be allocatively efficient. Right, so price ceilings, or when they're used in the housing market with regard to rental properties, known as rent ceilings, okay, and it really sets a regulation making it illegal to charge a higher price than a specific level. Okay, so it must be imposed below the market equilibrium if it's really going to disturb and disrupt the market. So that's a really important point to actually be aware of, and it's often overlooked in students' essays that for this to have any impact, it's got to be imposed below the market equilibrium. So let's just take a look. If we just plot out our demand and supply curve, we are considering the housing market and the inefficiency of using a rent ceiling. So let's just take a look at how this will end up looking. So there is our demand curve, roughly plotting our points. Meanwhile, we can also impose our supply curve, and let's just plot that one out there. So there's our supply curve. We can see the allocatively efficient level of output. So the allocatively efficient level of output, perhaps this is the rental market in London, we can see is £1,600. And at that level of rate in a particular area, we can see that the actual quantity demanded is 3,000 rental properties. Okay, so we've got that information. Great. Well, that's very useful to understand in terms of what's taking place in this market. Excellent. So now let's imagine a scenario where next up a rent ceiling is actually imposed. So the rent ceiling is imposed. Imagine now if they impose a rent ceiling of £800, and it's worth noting once again that the lower that this is below the equilibrium, the more disruptive the actual impact on the market will actually be. So if we impose our rent ceiling at this point, let's just plot that across and just be aware that this represents our rent ceiling here. Okay, so there we go. Now what we can see is we reach a point here where the actual quantity is supplied. So we do have some people with property, some landlords who are actually willing to provide property at that low level of rent, but it is much reduced, as we can see here. It's only 1,000 units as opposed to the free market equilibrium, which of course was 3,000 units. So it really is quite disruptive. Moreover, what we can also see, if we draw this through, we can see the point where supply and demand would actually equal one another. Where the available supply meets the available demand. And this, of course, let's just put this in purple, is a rental level of £2,400. So there are some people in this market that are actually willing to pay £2,400, but under this situation of having a rent ceiling, it means they only actually have to pay a rent of £800. It's an enormous potential consumer surplus. Or is it? Well, it depends. It depends. And the reason it depends is we can see there's a situation of enormous excess demand, where at this price level, we can see 5,000 units is actually demanded, but there's only 1,000 units available. So as a direct consequence of this, it means that there is going to be a lot of problems when it comes to actually finding rental properties. And as soon as they come on the market, there's likely to be big queues in relation to actually obtaining those units. Now, this can cause what's known as search activity. That search activity is where people have to devote a lot of time, energy, effort and additional resources. It could involve costs, of course, days off work to actually go and find and go and queue up for various rental properties as they become available. So as a direct consequence of this, there could be a significant area here of search activity. Now that area could actually represent the whole of this area possibly, but there's some other very interesting areas that we can actually draw reference to with regard to this diagram here. Now even if the actual level of rent paid is up here, we can see that some people still generate consumer surplus, okay, even at that very, very high level of rent. Meanwhile, we can see that there is the potential search activity here throughout this area. So that's our search activity. Now, that could take up the whole of this area, possibly. Or if there isn't search activity, people just actually write their name on the list and they just wait for a property to become available, then this area here would become consumer surplus for those few people in the market that can actually find a rental property to actually live in. So that would be the whole of this area here, okay, which could be potentially consumer surplus if that search activity isn't too exhausting. Okay, we can also see, of course, an area of producer surplus down here. So we can see the area of producer surplus quite clearly, where there's some landlords that are actually willing to charge a rent as low as £400 per unit, or just over £400 per rental unit. Okay, so there is some producer surplus, but we can see that there is a massive deadweight economic loss here as well, and this is why this is so inefficient. Deadweight loss measures the allocative inefficiency. It equals the loss in total surplus, and that is the loss in consumer surplus and the loss in producer surplus. So what is that total? Well, it represents the whole of this very large triangle here. Now this is consumer and producer surplus, which has just been completely lost from the marketplace. So this area here reflects our deadweight economic loss. That is bad news for society. It means that all of these people now cannot actually find a rental property that they otherwise would have rented. It means that these landlords may have actually sold up and moved on. And of course that means that there is a loss of producer surplus. Okay, so there's various negative impacts that we can see here. One further impact, of course, is the prospect of black markets, where some landlords would actually be selling their rental properties at below the actual rent ceiling that's been imposed. And doing so, of course, would be illegal, hence it would become a black market. So what can we argue in favour of such a proposal? Well, clearly it does benefit some people. It does benefit some people because it ensures that they can get a very low price for whatever rental properties they can find. But we can see that there is likely to be a situation of enormous excess demand at such a low price level. That is likely to cause various problems, okay, which is certainly going to disrupt market efficiency. But we can also see that this area here of landlords that now cannot rent their properties at these prices up here, well, what do? If they sell up and release more properties onto the market, then possibly this could help to actually ease pressure in the housing market. But of course, that can have deeper consequences as well. So if you consider the fact that actually rental properties are very, very important, and rental properties actually help factor mobility. They help ensure that people can actually move easily between different locations. They can up sticks and go and move to different areas of work. It's far more difficult to do that when you actually buy a property and then you're committed to selling a property. When you repurchase somewhere else, you've then got to pay very, very hefty stamp duty, and that can be a real problem to the marketplace as a whole. So overall, rent ceilings are not generally considered to be such a great idea by economists at all, and we can see why based on this diagram. Okay, there we go guys, great stuff, see you next time.